What is going on, traders? Welcome back to the Traveling Trader. In this video, I'm going to discuss why the stock market dropped today. Why did stocks crash today? Why this was expected, not necessarily at the time because we're not fortune tellers. And I always say this when it comes to the markets, but I'm more interested in levels than I am with time. I'll explain what that means in a second. Obviously, I have a chart right behind me, so we'll go over that. But why did the stock market crash today? Will the stock market continue crashing? And what steps you can take here to mitigate your risk? What stocks should you be buying? When should you be buying them? And at the end of the video, I'm going to pick a new comment at random. If you don't know, every month I do a sweepstakes where I'll pick a comment at random, and whatever stock or options play you guys say, I'll go all in with that stock or options play. I have about $1,000 in my Webull account, so I'm gonna leave that till the end of the video. And as the thumbnail says, yes, I did sell a lot of my stocks today. I realize that everybody's position is different. Everyone has a different cost basis. Everyone has a different trading strategy, aptitude level, portfolio. Everyone got in the markets at different times. For me, especially if you've been following my trades on the Discord, you know that I loaded up back in March, the week that the stimulus bill was passed. I bought up a bunch of blue chip stocks, Apple, Home Depot, Microsoft, McDonald's, etc. And I haven't touched most of those stocks since March. And I'm up hundreds of percentage points on a lot of those stocks. So I decided a good time to trim some of my positions, mitigate my risk, take some profit was now. Now, say you bought Tesla at 2,300 before the split, or you bought Apple at 500, you're in a vastly different position. Besides me advocating not buying at the high, I'm not a fan of it at all. And if you're not new to this channel, you know about this already, but you're in a much different position. So I'm going to try to cover all the bases. I realize that I cannot catch everybody's situation and make a video that's applicable to it, but hopefully you get some ideas out of this video. And if you want access to my trades where I send out all of my trades, stocks, options, long-term, short-term, swing trades, including all the trades that I took in March, link is in the description. Sign up. We have over 730 traders in there. We talk strategies, positions, which options and stock plays we're taking, and in my opinion, a great value. Without further ado, let's get right into it. So why did stocks crash today, and will the stock market continue to crash? If you're not new to this channel, you know that I've been talking about a correction for quite a while now. I did think we would hit all-time highs first. We hit and surpassed that if you're taking a look at the S&P 500. But if you recall my video regarding the fastest bull market in history, I was saying that typically after V-shaped recoveries, we tend to see corrections. And a correction is loosely defined as a 10% drop or more in the market. And I think Thursday's crash could be the start of it, which is why I took a lot of profit off of the table and I reduced my positions and entered mostly in cash. So let me go into the charts, I'll explain the why, and then I will tell you what you should do in this market crash and how to avoid overexposing yourself, which is the name of the game, and what stocks you should be buying at what levels. Let's get right into it. All right, if you saw my stock split videos where I described the Apple and Tesla stock splits into stages, you will see that I was talking about a post-split depression, right? This is due to buyers like me who bought in March and are now looking to take profits, and we're offloading this really expensive Tesla and Apple to those who are FOMOing at the high. And there aren't enough new investors to keep up the excitement, so the price starts to drop. So Apple and Tesla, being two of the biggest companies in the world, post-split, when they start declining, they can drag a lot of the market behind them. The other reason, and I've explained this in the last few videos, is the sectors in the S&P. So if you isolate the S&P by sector and you look at, say, like the tech sector, you'll see that the tech sector made all-time highs and surpassed it. This pink line is all-time highs here. And we went all the way up to 22%, or sorry, we went all the way up to about 25% past all-time highs before retracing almost 10% today. So it's really tech that's been driving us. But if you look at, say, energy, you'll see that we are nowhere near all-time highs. Here's the energy sector of the S&P 500. If you look at utilities, same thing, which is XLU. We are nowhere near the highs. So if there isn't a sector rotation in the market, meaning if money doesn't shift from the tech sector to other companies and other sectors, tech can only drag the market behind it for so long. And if there isn't a sector rotation, then we are likely to see that correction that I've been talking about. And again, I'm not a fortune teller. I'm not saying that I guessed it would happen today. I didn't. But I am paying attention to the price levels and what they represent. So I do foresee that we see a 10% correction at some point, and today might be the catalyst. And a 10% correction would mean that we drop from the all-time highs that we established. We could drop near in between the 50 and the 100-day moving average until we get positive jobs numbers, a potential vaccine or vaccine updates, and retail starts expanding again to fuel that sector rotation. Then we will likely see that drop that I was talking about, which is why I took a lot of profits off the table. Another reason why we might continue to drop further, if you take a look at this plot graph right here by Goldman Sachs Research, you'll see that this x-axis right here represents the S&P level reached for the first time and correlates it with the VIX. VIX is just a measure of volatility. And when we see that the S&P hits all-time highs when the VIX is at the high, then that's when we tend to see crashes. And the last time we were at this level was around the dot-com crash in the late 90s. And you can see that the VIX here, this is the in the orange right now, this is the VIX level, and the S&P hit these levels for the first time. So the market is expecting more volatility in the near future. All right. So now what stocks can you buy? What moves can you make in this type of market environment? Well, I always say this, and you can go back to almost every single video that I've done. I don't like to buy at the high. I like to buy major tech stocks, or major blue chip stocks, I should say, at the dips. So even Tesla, like there's people buying Tesla for 2,300. I mean, I think the market is going to be in a world of hurt because of all the new traders, all the new Robinhood traders. No disrespect to any of you, but you were born literally in a market that only goes up. And based on some of the comments that I've seen in the Discord, based on some of the comments that I've seen on my YouTube channel, they think that today is a major correction. This was only a 3% drop. The markets can get way uglier than this. And I'm hoping you don't overextend yourself. So in my view, if you're up a tremendous amount, you should be thinking of taking profits off the table, in my opinion. You want to essentially fade the market, meaning you want to buy these crashes. You can't be afraid to buy these crashes right here, right? And you want to sell into these rallies, which is exactly why I offloaded a lot of stocks today. I sold into this major rally here, the fastest V correction in history. So in my view, if you're up a lot, you want to start thinking of taking some off the table, keeping some cash on the side for more buying positions. All right, what else? You want to buy blue chips on the dip. So if you take a look at Apple, if you take a look at Microsoft, you know, there are key levels, like Apple right now is at the 21 EMA. This could be a buy point. The 50 moving average, which we hit back at the end of July. This could be another buy point around $106. But essentially, you want to get used to buying blue chips on the dips. Now, why am I so sure about the strategy? Well, here's Apple's long-term chart. If you are buying for the long term, you cannot go wrong buying at the dips. Apple will always make new highs. Same thing, let's look at Microsoft's chart. Microsoft will always make new highs. Here's Microsoft's chart, you know, going all the way back to 1986. Now, if you're one of those people that bought at the high, I'm sorry to say, but there's no remedy for that except for to hold or try to average your position out as the market is dropping. You could buy and average out your price. So in Microsoft's case, if you bought at 217, you know, you could wait it out. If it hits the 21, say like the 21 weekly EMA here at 198, you could buy a little bit more, etc., etc. But you can't fix every bad decision that you make in the market. Again, focus in the future on fading the market, buying the crashes, selling the rallies. That's what you want to do. You don't want to do the opposite where you buy at the high and then you panic sell once the thing starts dropping. Another thing you can do is hedge your portfolio with inverse ETFs. So there are ETFs that trade inverse to the markets. SPXS trades inverse to the S&P 500, and you can see that it's up 10% today because the S&P dropped. SQQQ is the inverse of NASDAQ, right? This one is up 15% today. So you can hold these as as hedges against your portfolio. Here's UVIXI, the volatility ETF. Another thing you could do options wise is sell calls against your position if you have at least 100 shares. This is called a covered call. So for example, let's just say that you have 100 shares of Tesla. Well, you could sell, say for instance, the 450 call for $2,250. Or if you wanted to go even a little less risky, you could sell the 500 call for $1,250. Now what that does is essentially you're selling a call, and if Tesla never hits those levels, if you're expecting bearish behavior in the future, and you're not expecting Tesla to hit these levels, and this is, by the way, September 18th expiration, so not that far out, only a couple weeks out, then you essentially could keep this entire amount. You can keep your entire premium and make money while Tesla is correcting. There are many videos and articles on covered calls. I'm just giving you an idea. You could do your own research. And if you want to learn how to trade options, I also do one-on-one training, but I only take a handful of people every month. If interested, hit me up. I think I have 1 or 2 spots left for this month. Another thing you could do, and I did this today, is sell cash covered puts against your cash position. So in this case, if you don't want to buy Apple at $120, which is what the price closed at today post split, say you wanted to buy the crash on Apple, you think that there might be some bearish action in the short term or in the midterm, and you wanted to buy Apple at $90. Well, you could sell a put for $245 at $90, expiring November 20th. Now, based on the delta, it's unlikely that Apple is going to hit this. There's only about a 14% chance that Apple will actually hit this price point. But if it does, then you get to buy 100 shares of Apple at $90 as opposed to the $120. If it doesn't hit $90, then you keep the entire premium that you sold this for, which is $245 per contract. Obviously, you can do nearer or longer term expirations. You can pick, a more riskier strike for more premium, but that's another strategy that you can do. Now, obviously, if you're a long-term investor and you know that none of these strategies gel with your trading strategy, your behavior, your personality, then you could just buy and hold for the very long term. If you bought at the high, again, you can't fix every bad situation. You will likely have to suffer a lot of bumps and bruises before your holding becomes lucrative again. And hopefully you learned a thing or two, or maybe I piqued your interest enough to look into some of these other strategies like a cash covered put, or a covered call, or an inverse ETF, things that you might not have known before depending on your experience. All right, I'm going to get into the sweepstakes right now. I'm going to pick a random comment and go all in based on what that comment says. I don't care what it is. It could be Tesla, it could be Kodak, I don't know. We'll pick it. But if you get anything out of this video, leave a big fat thumbs up. If you have any questions, leave it in the comment section below. Also, let me know if you think the market is going to crash further and what you plan on doing with your assessment. Subscribe to the channel, hit that notification bell. Let's get right to the sweepstakes. Stay safe out there, traders. Peace. All right, guys, here is my last video. Let us copy the link. And don't think that I didn't notice your jokes about my beard. People were saying that the traveling trader needs to find a traveling razor. Kind of lame, but also funny. You can be mean if you're funny. Let us put this in the random comment picker and see what we get. And then I will go all in with that person's comment. So let's see. Hopefully we get an actual pick, because what tends to happen is, people leave me hate messages or love messages. Hi mate, love the show. I think you should pick Zoom. Peter McCaskill, there you go. I'm going to go all in with Zoom, and whatever profits I make, I will give it to you. All right, here is my Webull account, ATNX. What the hell is this? I'm up 37% on this stock. I don't even know what it is, I'll be honest. All right, so let us take a look at Zoom, see what it's trading for after hours, and then I will put in a limit order. Lucky for you, Zoom dipped hard the last couple of days. So it dipped about 10% today. It dipped about, 8% yesterday. So a good 18% discount on Zoom. Let's see if it holds up by the end of the month. And by the way, what was your name again? Sorry. Peter McCaskill. Hit me up on the Discord or email me so that I can give you your winnings. I hope that you win. The last person won, I think it was 2% on Kirkland Gold. Place order. I'm gonna have to do this in pre-market tomorrow. But anyway, Peter McCaskill, congratulations, you won. I'm going all in on Zoom. Hopefully it works out for you by the end of the month, and I will give you whatever profits come out of this. Peace.